Good evening. So welcome you to the our annual exercise and our annual program we do every year after the budget, the Union Budget an in-depth analysis, the Union Budget 24-2015, and this year this program is being presented by the Bengal Chamber and PwC. So the program is kind of divided in three parts. We will have the opening part where we would request Mr. Arnob Basu, President of the Bengal Chamber and Advisory Leader PwC, Mr. Chandrasekhar Ghosh, former President of the Bengal Chamber and Chairman Bandhan Group and founder and former MD and CEO Bandhan Bank, and Professor Dr. Obhirup Sarkar, eminent economist and Chairman West Bengal Infrastructure Development Finance Corporation, to please join us on the dais. So this would be followed by taxation perspectives by Mr. Saurav Kedia, partner PwC, and Mr. Priyajit Ghosh, partner PwC. And then it will be followed by the industry session. So Mr. Chandrasekhar Ghosh would be delivering the keynote address and Dr. Obhirup Sarkar will be sharing the economic perspectives. With this, I would request President Mr. Arnob Basu to please deliver the opening remarks.
Thank you, Angana. Good evening, everyone. It is indeed a pleasure to be welcoming you all to the post-budget analysis program this year. And this year, the Bengal Chamber and PwC are jointly presenting this program. We are obviously very delighted to have the presence of Mr. C.S. Ghosh, former president of the Bengal Chamber and of course chairman of the Bandhan Group, founder and former MD and CEO Bandhan Bank, as our keynote speaker. Also Professor Obhirup Sarkar, eminent economist and chairman WBIDC, WBIDFC Limited, who would share the economic perspective. And then we would have the taxation experts from PwC to discuss quite a few of the tax impacts that we have. And we also have senior industry leaders today who would share their perspectives of the budget in their respective sectors and also what they think should be done for their sectors in the future as well. The union budget this year, if you can think of it, I felt that this year's budget was almost like a balancing act. It focused on four engines: agriculture, MSME, investments and exports. The focus was very clearly on enhancing the affordability of middle class income, looking at that demography, encouraging inclusive development, and of course private investments to strengthen their growth. The increased consumption is expected to boost the Indian economy, as we all know, and raising FDI in sectors like insurance to 100% has the potential to drive more capital infusion in this sector. Also expected to provide lasting advantages for India's financial and healthcare systems. As we always feel that the budgets of nowadays needs to focus on inclusive growth and not just on growth, and I think this year was no difference. Focus on healthcare ecosystem was very, very prominent, with initiatives in medical education, cancer care, or even access to life-saving drugs. And other critical sectors like maritime, energy transition, and mining also were addressed. Support towards MSMEs, again, we are in Bengal, and of course, Bengal is a very MSME-focused state, so to say, and we have the largest number of MSMEs in the country. Support towards MSMEs is expected to boost manufacturing and export sectors, fostering many entrepreneurship and opportunities and innovation. These measures, of course, are there to focus on productivity, access to talent, global competitiveness, as well as innovation. We heard of fund of funds for startups, which obviously will help diverse groups. We did see quite a lot of focus for women and specifically from marginalized communities to drive economic growth, which will again improve our inclusivity. The period of incorporation of startups has been extended by 5 years. The government also is providing long-term loans to first-time women entrepreneurs. And I think getting more women into the workforce is something which India is very, very critically needing at this point of time. And specifically when we look at what the government is looking at marginalized parts of the society, I think it gives us a lot of hope about the future. Youths, farmers, women, and economically disadvantaged were taken into consideration with key announcements around tax relief, FDI, and insurance promotion and innovation. This year's budget, in that way, has impacted multiple sectors, as we also saw in the capital markets, and with a lot of focus on digitization around AI. It also had a lot of focus on sustainability, specifically around renewable energy. And there were other sectors like fintech, railways, aviation, logistics, banking, which also got addressed. The Center of Excellence for AI for Education, with an outlay of 500 crores, the National Nuclear Energy Mission, the National Geospatial Mission, and the National Centers of Excellence for Skilling are major statements, and I think that these are all long-term bets for our country's future. The renewed focus on nuclear energy has made, a lot of sense at this current juncture when tech giants are also trying to harness this energy to fuel the vast data center energy needs the country is looking at after the AI revolution. And I would probably say that this is something which the country really needs and is a need of the hour. Keeping with the global dynamics, we also saw that there were sectors like electric mobility, which were looked at to domestic manufacturing of lithium-ion batteries. Many additional capital goods for this sector were looked at. And I do think that when we look at the customs duty relief which was given, many of the sectors which were chosen were sectors which we all feel conceptually should be the sectors where we should focus on. And of course, we had the huge tax relief for the middle class Indians, which really form the pillar of our society. So with all of that, I think it was a very insightful budget, and I would like to now hand you over to the two experts, Mr. Ghosh, and of course, Mr. Ghosh would be giving our keynote address. So with that, may I welcome you all once again to this evening. We hope to make this evening insightful for you, and thank you for sparing your time. Thank you.
Thank you and good evening to all of you. And thank you, Arnav. And our respected another guest of the speaker, is economist, and Abhirup Sarkar sir. That is also our pleasure that he is given the time today to analyze the budget. I am not like to the person give the keynote address. I just given is some brief about it, what I learned on that. Some of the point already mentioned by Arnav will not like to repeat. What I've seen that in the focus of the three things of the total budget. The first point I see that the government have been given the focus last couple of years, that is an fiscal deficit will control, and they are succeeded. If we see that in the below the 5% of fiscal deficit, it has been now in there, though it isn't showing on that 4.9 in December, but expected by March completed 4.5. So that is a very good way they are maintaining in that last couple of years, though pandemic is there and a lot of infrastructure investment happened, but finally they are trying to control by the central government or country perspective on that, how they control on that the fiscal deficit. And they are also looking on that how future also like to make it on that. And this is a one big point for the country, it can be like to the better for the rating point of view and perspective point of view investment. It's a good. Second, my point I found on that is it's not only the financial deficit, they are very concerned about it and very careful about it, which is the public debt, which is 56% central public debt. If I go to this, the state together is 84%, but the central, which is the R controlled, public debt is coming to the 56%. Though again I have been saying that the scenario of the last 5 years or couple of years on that, so though are lot of expenditure they made on this. So there is a second point is a very good and positive, and they are also focused on that the 56% will be future next 5 years will become to 50%, which is best as our country, like a big country, to maintain on that, not compared to the US 100% of that public debt. So this is a 2 point is in, of course, is in credibility of the country will be like to come as a better. I feel that it is, if they can be like to borrow more, many people may be thinking about it on that. If it is in borrow mode, what will be like to happen? So that will be like to make another way to squeeze the funding, and the liquidity of the bank will be like to come down, and again interest rate will become up, which cannot be like to possible to funding more in a reasonable rate for the growth of the industry. So for that reason also it is a very good focus on that, how it can be maintained on this. My third point on that, yes, they are trying to this budget to focus in the growth, how it can be made, because the last couple of quarters we have been seeing that there is one thing, consumer demand has come to this little bit low, and the unemployment is increasing. So this is very important for the government for budget, how they can be give the good push for the growth of the industry. If it is coming to the growth point of view, so that you are mentioned about it, and mentioned every people talking about it, there is 12 lakhs up to there is a tax rebate as given, that may be collected in the 1 lakh crores of the money. And of course in the other side they are reduced this 1,10,000 crores from the budget of infrastructure investment that have been reduced. So they are given this benefit is here, and that is the other side. What is the main between these two factors which I perceive about it on that? If the investment will be go on that infrastructure, it will be some part will be go to the hand of the people. But if it is give this the benefit direct to tax benefit, so directly this the 1 lakh crore will be go to the people's hand, and people will be like to spend the money, which can be helped to this consumer demand will be like to little bit up, and the economy will be directly come as a very good impact. So that is maybe the one way it is better compared to the infrastructure to other. And next another point which I see that there is a very good control of the expenditure. Government expenditure, they are trying to control on that. It cannot be like to more increase. They are feeling that the one side they are not like to increase the employee cost, and they are given that the money in the hand of employee as a tax rebate. It will be direct impact to the people. They can be spend the money, and the business can be like to develop, and economy can be impacted directly on that. Of course that all of us we know that there is a 10 point focused by the government, Of course, all of us know about it. I'm not like to go to this the all 10 points. I'm going to this the 4 points all together. One is in focus the budget on that the poor, youth, women and farmers. These are the 4 sectors, 4 category of the target of the people, trying to give some support on that. Of course, if I say that the poor in the NREGA, whatever we know that the budget is the same amount, they have not reduced, they have not increased, 86,000 crores are given on that. And the second part on that, the Gram Sadak Yojana, that is also trying to focus on that rural and low income people, how they get the benefit from this too. And third is there we know there is a focus on that how water mission, national water mission, there is also given this focus, the how the people will be get that the better health condition with other matter. If I go to this the agriculture point of view, farmers point of view, there is an Kishan credit card, whatever earlier what is in 3 lakhs tax rebate based in the funding, it has now come to the budget, it is saying that the 5 lakhs. It will be like to impact to this the small farmers who are depend on that the fertilizer sellers or traditional money lenders, they can be take that fund utilize for their production, and especially our state because of the small farmers are more in Bengal because the ticket size of the land are small. Of course, it is in all together employment point of view and rural point of view all together. I feel that the MSME also given the focus on that, and MSME all the definition they are trying to build up on that at the double their ticket size, which one is the 5 crores has come 10 crores or the 10 crores has come 20 crores. So they are now eligible to get this the funding as a MSME, so that can be like to benefit it to the MSME sector, because MSME is a backbone of the India. They are major employment are given in here. So out of this MSME, many of the sector they are identified. I feel that we are all know that about tourism is and very importantly they are focusing on that, how it can be like to make it on that. And Arnab mentioned about that the export, yes, export based MSME also will get the more benefit. Finally, what I feel that the financial year, whatever the budget has come, very optimistic on that. I am not feeling that the very aggressive or very much conservative, is an optimistic, and trying to give some liquidity support to the market, so that people will be like to access this funding and the growth of their business, and which can be impacted to the country's the employment will become better on that. Many are more of this, the details is there. I hope that you have some question. I feel that this is the overall perspective from my side on the budget, and hopefully this budget will be help to all of us on that. Thank you to all of you.
Professor Shakar, if we can have your
Thank you very much. I thank Bengal Chamber for giving me this opportunity to speak here on the budget. I will share my whatever I feel, whatever I understand about the budget, and I will try to give you a macroeconomic perspective about the budget without going into the details of sector-wise allocation and so on. I will I will share with you the way I understand the macroeconomic aspects of the budget. Now, I think each budget has its own philosophy, if you may, and this time also there was a clear philosophy. Now, in the earlier years, if you compare this year's budget with the earlier year's budget of the same government, the emphasis was clearly on the supply side. So, as we know, there is a demand side and there is a supply side, and taken together they constitute the market. Earlier on, the emphasis was on the supply side, building up infrastructure mainly. That was a good move, of course, and it was sort of assumed that once supply is built up, demand will come forth automatically. There will be demand for goods, because once you create supply, you create to create this supply, you create jobs, and that will create income, which will sustain the supply potentials that you have created. So the focus was basically on the supply side, mainly on infrastructure investment. Now, this year there has been a shift on the demand side. So earlier, people sort of criticized the government for not paying enough attention on the demand side. There were criticisms saying that demand cannot come automatically. Government has to do something about it. So this year there was clearly a focus on the demand side. Now, how to boost up demand? Roughly, if we divide the income earners in our country into three broad groups, let's say the rich, the middle class, and the poor. The poor, they have too little money to spend really, because whatever they earn, they have to spend on basics, on food, shelter, and so on. So they have very little extra money to spend. The rich, on the other hand, they seem to be more or less satiated with goods, and their consumption is often oriented towards imports. The import content of their consumption is high. Often they would like to have foreign produced goods. So that will do little good to the domestic manufacturers, domestic economy. So neither the poor nor the rich would be great demanders as far as the domestic market is concerned. One has to focus on the middle class. The middle class are the people, they are the aspiring consumers. They want to have a better lifestyle. They have just they would like to improve their living standards basically. So from that point of view, it's a good idea to focus on the middle class. Now, the government, whatever limited means it has given a fair amount of benefit to the middle class. So people with 24 lakhs income and more would save 1,10,000 or something on taxes, which is not a small amount. So the focus was on the middle class, was on demand. This is number one point. But the supply side was not ignored, of course. It was not ignored. There was a 4.3% expenditure. 4.3% expenditure went to infrastructure investment. So there was a balance in the sense that the demand side was, the government tried to boost up the demand side, and at the same time, there was significant investment on the supply side on infrastructure. Now, the question that arises is that once you reduce the taxes direct taxes, and there was some reduction in indirect taxes as well, rates, customs duties and all. The finance minister said that there would be a direct loss of revenue. At the same time, she said that the fiscal deficit will also come down. So on the one hand, you have a reduction in revenue. On the other hand, you are claiming that the deficit will go down. How is that possible? Now, the assumption is that once the demand side is boosted, once there is, once people are spending more, there will be more business in the economy, more transactions, which will generate more income and more indirect taxes, GST. So the government is clearly expecting more money to earn more money through GST, which will, taken everything together, reduce the fiscal deficit. It was like 4.8% in the previous year, revised estimate. Now it will come down to 4.4%. So this is the assumption. Assumption is that those who have been, who have benefited by, through paying less taxes will be spending. That is the assumption. Now, at the same time, okay, though fiscal deficit is coming down, there is some borrowing. It's not very small, about 80 crores, more than 81,000 crores, I'm sorry. 81,000 crore of government borrowing is there. This, the finance minister said, this will go, this is about, this will go mainly to finance infrastructure. So as if the government is borrowing money just to finance infrastructure. Because fiscal deficit is 4.3% and infrastructure expenditure is 4.3%. They're very close. So as if the government is borrowing money to finance infrastructure. Fine. Now what are the possible effects of this? If, generally, if government debt goes up, that puts an upward pressure on the rate of interest. And we know that if the rate of interest goes up, then there are two adverse effects. First, consumers will be spending less because those who take loans to buy houses and cars and so on, they will be discouraged. And second, private investment will suffer. Those who are, taking loans from banks and other financial institutions to invest, they will also, think twice. Their cost of borrowing will go up. So rate of interest, whether the rate of, if the rate of interest increases because of this borrowing of 81,000 crores, then there will be a problem. However, the assumption is that people will be spending more, therefore income will go up, and if income goes up, then rate of interest should not go up for the following reason. If income goes up, okay, if people have more money, let me put it this way, if people have more money, they will not only spend, they will also save. They will save a part of their money. And through the multiplier effect, if income goes up, then there will be more savings. Not only consumption, but also savings. If savings are higher, that would put a downward pressure on the rate of interest. So, due to increased borrowing by the government, there would be an upward pressure, but due to increased savings, there should be a downward pressure, and again, the government is assuming that there would be a balance. Rate of interest will not go up by that much. So the assumption is important. Assumption is that, people will not only consume more, they will also save more. Now, there is a risk, of course. This is an assumption after all. There is a risk. The risk is this. We don't know what is going to happen in the international market. For example, price of oil might shoot up, or President Trump might impose fresh tariffs so that international trade might suffer, and there could be all sorts of external shocks on the economy which might adversely affect consumer spending. So you never know. Given other things which we call ceteris paribus, of course consumer spending should go up because of the reduction in taxes. But other things might not remain the same, especially the international scenario is a bit volatile now, and if there is a big shock, then consumer spending might suffer, the assumption will go wrong, and then the fiscal deficit will have to go up further. So the fiscal deficit remains constant on the assumption that consumers will spend, but if there is an outside shock or shocks, then consumer spending might not go up by that much, and fiscal deficit will go up in that case. So that is the downside. There is a risk, but I think this is really their first year of budget. Last year's budget was just interim. One should take risks. Otherwise, you cannot hope to gain, so to say. You cannot hope to increase the rate of growth. At least in the first year, one should see how it works, whether it works. No one really knows what's going to happen, but I think the risk is worth taking. But then there are two more points I want to add. One is that the lower bottom, you see, the finance minister has announced that if someone's income is less than or equal to 12 lakhs a year, then he or she will not have to pay any taxes. Earlier, this was 7 lakhs. So it was there, but it has been increased. So we can say that people with income greater than or equal to 7 lakhs are going to benefit from this budget. People with income less than 7 lakhs are going to remain unaffected. So, because they were not paying any taxes in any case. But you see, in our country, a large number of people, more than 50%, much more than 50% actually, are with income less than 7 lakhs. So one can clearly say that the spending, this spending incentive will affect only a handful of the people. The lower strata will remain unaffected. But that is of course directly unaffected. If there is more business in the economy, everyone should gain. Even the lower strata, people from the lower strata should gain. But this is one point, that the people from the lower strata, they are not going to benefit directly, and there has been some reduction in 100 days work, projects like that, which gives direct benefit to the poor. So this is one. And the other is that when one talks about infrastructure, of course there has been a lot of infrastructure spending. However, one important part of infrastructure is education. So one problem in our country is that the youths who are coming out of let's say colleges, engineering colleges, business schools and so on, private business schools, private engineering colleges, many of them are unemployable. The quality of education that they get is very, very low, unfortunately. To get good quality education, you have to spend a lot more money. So there are private institutions which will give you good education, but they are very, very expensive. For example, I can recall Ashoka University in Delhi. You have to pay like 50 lakhs for an undergraduate course. So that, most people cannot afford that. So the point is, good quality education is not, cheap. You have to spend money on that. But then, there should be some subsidy by the government so that a large chunk of the people can take advantage of good quality education. It's not only from the point of view of equity, but from the point of view of efficiency. If these, youth, let's say, if they can get good quality education, companies can employ them. Companies are going to benefit. And that will, in the long run, benefit the economy as well. So, the government should spend more money on public education, but the allocation to education is falling every year, and that's something that I'm worried about. So that is basically all I wanted to say. Thank you very much. But overall, it was a good budget. Thank you.
We may take a couple of questions for interaction, or we can go to the next session.
Dr. Sarkar, you mentioned that the reduction in deficit, in spite of giving up a lot of the taxes, is going to come from increased GST. But in addition, the corporate profits have been on an uptrend. Could some of that gap also be bridged by taxation on increased corporate profits?
Yeah, sure. I'm sure, corporates can be taxed more. But the government thinks that the corporates should be given more incentive, at least for some more years. But it's I think it's a question of economic stance you take. How much incentive to give to the corporates, to the big corporates. But if you, talk from an equitable point of standpoint, then I think since corporate profits have gone up, significantly gone up, tax rates could be increased a little bit. That's my personal opinion.
I have a short question, Professor. I did not see anything in the budget which addresses income inequality. The trickle-down effect obviously is not working for the last few years. So what do you think the government is going to do in that regard?
I completely agree with you. There is very little in the budget to address the problem of inequality, and inequality has been going up for quite some time. The worry is that the economy is getting divided into two sectors. One is really growing and the other is remaining stagnant. And that, I was talking about education. One way to bring the underprivileged into the mainstream is to provide them good education. And only the government can do that. Private sectors will not have any incentive to do that. So one way is to increase spending on education. We can cite examples of China and Korea who did that, and with very good results. I'm not talking about very fancy kind of education, but basic education, so that they can be employed in factories, in offices and so on, so that a person can draft a letter, for example, correctly. So that kind of education should be provided, and the government should come forward to do that.
I give this the different one, that the one point we are talking about the trickle down. Other side is for to whatever the gap will be like to change. This need to new model, another model which is a trickle up. If we like to build up the entrepreneurs in the large number of entrepreneurs in the level of low income, middle income, that can be helped more on that to the country to reduce in this inequality. So, of course, many of the scheme is there, but it also will be like to believe in that charity cannot sustainable. It cannot be helped the people to in long run sustain their earning mindset on that. So how it can be like to make this the model which can be encouraged in the ground level, the more people will become as an entrepreneur and support on that entrepreneur. That will be better. If you say that I can be supported the 2 years to you or 3 years to you, maybe the more than the whatever the government are now giving, and they can be like to make on that, you must be build up a enterprise and to come to out from that. So that is the different way it can be like to think, not in a existing traditional system. This can possible. Thank you.
Sir, I do have a very small question. Right. Yeah, sir, please. We are the incubator. So can you please light up on this particular budget on the incubation system in the next year? And you know, all of us know that in the entrepreneurship development index, till today India is below 50, right? So can you please enlighten on that particular part?
Incubation. Well, you see, the Chandrasekhar Ghosh will be a better person to answer that question, I'm sure. See, the way I see it, young entrepreneurs, of course we need young entrepreneurs, and especially from the underprivileged part of the society. But they need a lot of hand-holding, they need a lot of subsidization in some sense. But the problem with subsidization is that it becomes a habit. You see, there is another part of it. Once you start subsidizing, people will think that they will keep on getting these subsidies, so they do not have any incentive to do the right kind of work. A better scheme would be, I remember in South Korea, when South Korea was still not very rich, they had time-bound subsidies, and they really, government really meant that they were, made sure that they are time-bound, in the sense that you will get this subsidy for 3 years. If you cannot perform, then you are not going to get it. You are going to perish. So that, in our country, what happens is that governments are often too soft because of political reasons, of course.
I given this the add with you on that. Very good point. I have been my earlier the thought I have given, which I done it in the last from the 2006 to today. We are catching the people from the ground who are ultra poor. It's the poorest of the poor. They are not eligible to take even the microcredit to run the business. We have selected them and identify with the help of villagers, and there is 3 steps we have been taken on that. First steps we found on that these people are lost their confidence on themselves, that they can do something and they can success. So we are given a confidence building training. Then we ask them what you like to do. After 2 years, nobody, you will not ask any help from anyone. And they are selected the enterprise. We given the enterprise management training, and we are provided full asset service to them, to buy the asset given to them, and every 50 families, we provided one staff to monitor, mentor, hand-holding, everything doing on that. And first 50 days we are paying as in consumption stipend for food, because if they spend the money from their business and they are confidence again will go down, no profit is there. So after the 18 months, we are started to graduate them in the mainstream. And 2 years project, everyone successfully running their business, 96% success, 4% because of the older age. They are not to continue on that. They are the best way running on that. What is the cost? Total cost is a 40,000 rupees, which is in less than 2 years NREGA cost of the government. So we are also doing in that 1,50,000 family we are doing it. It's a need on that, the scale to the total country on that, this model. Bihar government is doing massive with all support we are providing the technically, very technical on that. So there is a model, no doubt on that, not only Korea is in India also. So that can be helped on that. Sir mentioned about it on that, no? Good,
Sir,
thank you.
I do have one more question, sir. Sir has explained this very nicely. Can you please
we-
elaborate this particular budget on the light of biotechnology? Because maximum of the people are telling that this may be your next future of India. Please.
Sir, we will take that question offline because we have some panelists and they have to leave. So we don't want to delay too much.
Sure, sir. Sure. Sure.
Before we move on to the next session on taxation, I would request Mr. Arnab Basu to please present tokens of our appreciation to Mr. Chandrasekhar Ghosh and Professor Dr. Abhirup Sarkar. We'll take 2 to 3 minutes to do the changeover, and I would request my colleague Ms. Shorbani said to take the next part of the session forward. Thank you.
We will now move to our next session on taxation. I request Mr. Saurav Kedia, partner, and Priyojit Ghosh, partners from PwC, to please be on the dais and take the taxation session forward. Taxation perspectives on budget 25-26.
Thank you, Sarvani. Good afternoon, ladies and gentlemen. Thank you, Bengal Chamber, for inviting me. I'll be providing my views on the direct tax proposals and dealing with few of the relevant ones. The Union Budget 25-26 presented by our Honorable Finance Minister marks yet another milestone in India's journey towards a Viksit Bharat. The budget speech for this year was concise, focused, spanning just 74 minutes compared to 2 hours almost in 2020. The most far-reaching announcement by the Honorable Finance Minister was the announcement of the new income tax bill, which is set to be introduced in the next week. The Finance Minister emphasized that this new bill is crafted in the spirit of Nyaya, which is designed to be very simpler, transparent, and only half of the size of the current Income Tax Act. Many suggestions have been given by various chambers, and the industry and public is waiting to see what really comes out. One more interesting part of the budget which I noticed was that the government has issued FAQs for the first time in respect of the various tax provisions. This was not there in the earlier years. Clearly, the intent is that they want to bring certainty and reduce the room for interpretation and possible litigation in future. If you see the Union Budget 25-26 tax proposals, they were guided by 4 broad objectives. First was clearly the tax structure to bring more stability and clarity There is no change in the corporate tax rates, which is a good news. So far as the personal tax rates are concerned, it has been substantially reduced, which benefits most of the taxpayers. There have been clarifications which have been issued in respect of FIIs and AIF because there were some litigations around that. I have already spoke about the roadmap for the new income tax bill. Building trust was another important aspect which was spoken by the finance minister for bringing measures to encourage voluntary compliance and reduce compliance burden. Few of the steps towards that was incorporating updated tax return, the extension of the updated tax return, rationalizing the TDS and TCS provisions, bringing transfer pricing concept or block concept in transfer pricing provisions, and fast track mergers and demergers. Fourth objectives of the proposals were also for fostering with the aim of growth and investments by introducing new incentives for few sectors and bringing extended benefit for GIFT City and startups. I'll move to the personal tax changes. There have been no change in the tax slabs under the old tax regime, with the clear intent to encourage the taxpayers to move to the new regime. If you see under the new tax regime, there have been no income tax now up to 12 lakhs annually, and for salaried taxpayers up to 12.75 lakhs annually. This is after rebate under section 87A. Just one clarification, in case we have any capital gain or any other special income, the benefit of 12 lakhs would not be available because those particular income would be chargeable at the special tax rate. So for example, if 12 lakhs is the total income, 8 lakhs is the salary income and 4 lakhs is the capital gain income, you can still claim 8 lakh rupees as exempted, but so far as the 4 lakhs is concerned, it will be taxable at the special rate. The good part of the proposal was there was a substantial overall in all the tax slabs. If you see the maximum tax rate of 30%, it kicks in at an income of 24 lakhs as opposed to 15 lakhs, which is a steep jump. Clearly, it's a welcome move. The same should result in a lot of disposable income in the hands of the taxpayers and additional and expenditure in their hands. In terms of the tax savings, if you see, in case you have around 15 lakhs of income, there is a 36,000 of tax saving. In case you have a 20 lakhs income, it's around 93,000 of tax saving. And in case you have income more than 24 lakhs, there is around 1 lakh tax saving. Clearly, a good tax benefit. As per the statistics, if you see, out of 7.4 crore income tax return which were filed in 23-24, nearly 6.5 crores individuals earned below 12 lakhs. This means 87% of the taxpayers will now have a zero tax liability and will not be filing the return. As announced by the finance minister, the said move would result in around 1 lakh crore tax foregone for the revenue department. It would be interesting to see whether this loss of revenue, how the loss of this revenue would get augmented with either buoyancy of the tax collection or bringing any new tax within the scope is something we need to see. In terms of other changes, if you see, the annual value of 2 residential occupied property is now to be taken as nil if it is occupied by the owner for his own residence or if he cannot occupy for any other reason. Earlier, this particular benefit was only in case you are not able to occupy the property because of either you are away from the property because of business or for on account of profession. There is a tax benefit which is available for the NPS, which has been extended now to NPS Vatsalya also. However, the over limit of 50,000 has not been changed. Redemption of ULIP, there was a ambiguity in terms of the taxation, whether redemption of ULIP, which is not exempted under section 1010D, whether it will be taxable as income from other sources or capital gain. Now they have clarified that it will be taxable as capital gain. In case you see the indifferent point of time, if indifference point of point in terms of comparing the old regime and the new regime. So in case there is a taxpayer who has an income of 24.75 lakh, he is indifferent if he is claiming deductions and exemptions up to 8 lakh rupees. In case he is claiming exemption or deduction which is lesser than 8 lakh rupees, clearly the new tax regime would be beneficial. However, in case he has deduction more than 8 lakh rupees, the old tax regime would be beneficial. So this is the break-even point which we have identified for each of the scale of the taxpayers in terms of salary. Make in India is one of the major initiatives of the government to promote manufacturing. Earlier, the corporate tax rate was reduced from 35% to 25%. Thereafter, we had 115 BBD, which was brought in terms of reducing the tax rate for the manufacturing companies to 15%, which had a sunset till 2024. Now, if you are aware that companies like Apple have started manufacturing in India as part of China Plus One strategy, we have a lot of focus on semiconductor manufacturing in India. The problem with these technology companies is that when they provide these services or technology in Indian entity, they send their people, they create a permanent establishment here, which results in a lot of litigation around P attribution, lot of additional compliances and withholding tax applicability. In order to incentivize the non-residents and the foreign companies who are providing services or technology for setting up electronic manufacturing facility to a resident company, a presumptive taxation regime has been brought. Now under this provision, 25% of the amount which you pay to the foreign company would be considered as the deemed profit and therefore resulting in an effective tax rate of 8.75% on the gross receipts. The scheme is yet to be notified by the Ministry of Electronics and IT, and it will be good to see that which are the products or segments which will be included as part of the scheme. In terms of changes in the transfer pricing, there is a concept of block assessment which has been brought for transfer pricing matters. The taxpayer is now provided with an option to opt for block assessment for his transfer pricing matters, in the sense that in case the transfer pricing officer determines the arm's length price in the first year, the same arm's length price can be applied for the next 2 years. This will certainly this will certainly help in ease of doing business, and this will help in reducing litigation and multiple assessments for each of the year. The option will be subject to the validation and subsequent examination by the transfer pricing officer. The provisions are introduced. If you see the open issues, there is a confusion as regard when the matter which is determined by the transfer pricing office in the first year, if it travels to the DRP, then and the DRP provides the relief, then for the next 2 years, how the assessing officer will compute the arm's length price, whether it will consider the DRP relief and then compute the arm's length price, or whether it will not. So this is a confusion which is there, which we need to see into the rules. So far as the scrutiny is concerned, obviously since the transfer pricing officer would be doing the scrutiny in the first year, he would be liking to look into in a more deeper details, because that particular transfer pricing arm's length which he decides for the first year would be applicable for the next 2 years. The other thing which we need to look into is that, is this a precursor to corporate tax assessment as well, and do we see that a block assessment concept would also be brought for the corporate tax assessments. In terms of the accumulated losses, if you are aware, wherever there is an amalgamation which happens, the amalgamated company gets fresh life of 8 years in terms of carrying forward the losses of the amalgamating company. Now that benefit has been taken away with, and only the balance carry forward for the losses would be allowed, which is remaining in the hands of the predecessor company. The same has been done clearly with the object of preventing evergreen of losses through successive amalgamations. So any amalgamation wherein you have substantial business losses would now get impacted. Further, the proposed amendment applies to any amalgamation which has been effected on or after 1st April 25. Whether this section would apply where the appointed is before 1st of April 25 would be something as a matter of interpretation, because it is not clear that in case the amalgamation happens before 1st April 25, whether you will be hit by this section or not. Further, if you see, the insolvency and bankruptcy code has been very, very effective in terms of resolving the NPAs and reviving the SIC unit. There has been no carve out for acquisitions which are made under the IBCs. There has been rationalization in the TDS provisions, good move. The threshold of many of the TDS sections has been revised from 5,000 to 50,000. The same should definitely help the MSMEs in improving their cash flows. In terms of the TCS, there is no prosecution if the TCS is deposited delayed by the time of filing of the return for the quarterly compliances. So far as the applicability of TDS and TCS on sale of goods were there, earlier both TCS and TDS were equally applicable, which resulted in overlapping of the compliances. It's a good move that now there is no TCS on sale of goods. Further, there is no higher TDS and TCS in case of non-filers, which was there in 206 AB. The other important change was in terms of filing your updated return. As of now, assessee is given an option to file an updated return till 24 months, obviously by paying certain additional penalty, in order to disclose any income or any mistake which has happened in the return. Now that particular time limit has been extended to 48 months. There has been rationalization in the charitable trust provisions. Earlier there was a provision that a trust registration would get cancelled in case there is an incomplete application which has been made. Now that particular condition has been removed. So in case there is small error here and there in the application which a charitable trust makes, that will not result in any cancellations of the registration. Further, the registration period for small trust has been extended from 5 years to 10 years. And there has been simplification in the definition of specified persons. Good incentives in terms of the IFSC, and in order to incentivize more foreign capital to come into IFSC, there have been a lot of tax incentives. The sunset clause for various units to set up in the IFSC has been extended to 2030. So I'll just conclude my presentation with some hits and misses. If you see, the Simplified Income Tax Act was something which was really needed, and that is something the government has been working on, and they have brought it. If you see on the personal income tax, there is a good benefit in terms of revamping the slabs. That's a welcome move. In terms of startups, the benefit of tax holiday has been extended in the terms of starter to boost the MSMEs and the startup sector. And there have been good move in terms of rationalization of the TDS and the TCS rates. What could have been done better, or what has been missed, I would say, is the litigation which is pending, be it the CIT appeal, be it the bar. The government could have brought some time limit, etc., or some mechanism for disposal of all the pending appeals which is there. So far as Pillar 2 is concerned, there had been a lot of discussion on the GloBE rules, whether when it will be implemented. However, since there is no consensus at the global level and particularly at a US level on implementation of Pillar 1 and Pillar 2, government has not brought this particular amendment in so far as Pillar 2 is concerned. There is a lot of expectation in terms of rationalization of ESOP taxation in the case of startups. That is also something which has not seen light in the budget this time. And obviously the last one was, which was the most important one, was the manufacturing company boost up by having this 15% tax rate. Earlier we had this 15% tax here, but the sunset was 2024. There was expectation that this particular benefit would be extended, or there will be some new benefit which should be given, but unfortunately this has not come. It is expected that in the new income tax act which it comes, maybe this particular benefit would be extended. I conclude my direct tax proposals. Thank you so much for a patient listening. Thank you.
Okay, so on the indirect tax part, there are two sections to it. One is the customs and the other one is GST. Okay, so fundamental difference between two is that, you know, one is exclusively within the purview of central government. The other is more of an outcome of whatever states and the center decides together, right? Because with the amendment of GST, with the introduction of GST, the center has lost its power to levy taxes on its own accord. Now it has to come together with the states. So most of the proposal that you will see within GST is because something which has already been dealt with within the GST Council. Having said that, there are a couple of them where they are trying to plug a few of the rulings which I am going to discuss in detail. So on the customs part, in the customs, the amendments are more optics in nature. Why I say optics in nature is that within the ASEAN countries, India continues to have the highest customs duty rate, right? And with all these discussions around the tariffs and all, optically it looks quite odd that we have so many, you know, slabs, so they had to compress those slabs. What they've also done is they have levied an additional surcharge called Agriculture Infrastructure Development Cess, right? So this is a cess that has come in place. When you add these two together, you will perhaps land up at the same rate of duty, effective rate of duty, right? So at one hand, the basic customs duty rate have gone down. On the other hand, Agriculture Infrastructure Development Cess has come in. The second reason of introduction of Agriculture Infrastructure Development Cess is that this cess doesn't go to the Consolidated Fund of India, unlike customs duty, right? If it goes to Consolidated Fund of India, then 35% approximately has to be shared with states. So I take it to the fund and then I can spend it as a part of my own budget, which is central government, right? So when you look at the rate, my recommendation is that combine all the two rates together and then see what's the effective rate. Moving on to the legislative changes. Now these changes are more or less maintenance in nature, and it's basically to kind of overcome certain challenges. Many a times whenever we go to the government and go to these committees, say, I need this change, the first question that they ask is, what is an impact on revenue? Does it have an impact on revenue? If it has got an impact on revenue, no, not really doable. If it doesn't have an impact on revenue, then can it lead to evasion of tax, right? So that's the second point they always look at. So these are certain changes which they have kind of done it to kind of make sure the assessees get supported. So there was no time limit to do assessment which are done on a provisional basis. So what is provisional assessment is that when I import goods, I'm not too sure about few stuff on the consignment, value, rate of tax and all that. So I request them that I don't want to make my payment of duty final. Please keep it under pending and I'll give you some bonds and guarantees and you finalize it during due course of time. So there was no time limit to it. And this was becoming a big challenge because the officer would sit on it and not decide, because it's a hard call to take, because those state places are not very straightforward. Those who are working on limited risk distributor model, LRD model, where you buy and sell goods in India and you have an upward or a downward adjustments to be made because your risk in India is limited, right? So if you incur losses in India, they pay a subvention fee. Now what is the subvention fee? If the pricing were to be done in the manner it was supposed to be done, there would not have been any payment, right? And we always suggested that let's go for a provisional assessment. But the problem with provisional assessment is that the finalization, there was no certainty. So now there is a time frame of 2 years, which can be extended by a year. What is to be watched out? And of course, sorry, I forgot to mention in my presentation that what you see in the orange are the issues that we have picked up in the last 50 hours or the open points. So just look at the orange one. The pending SVB assessments, those are certain things which gets grandfathered, which means that you can always pursue for a closure within 2 years. What happens if they are not finalized within 2 years, right? We don't have an answer to it, but we think that it is automatically going to get finalized. Now, automatically going to get finalized without passing an order, how we don't know, but this needs to be closed within 2 years. There is only a year which is given as a matter of extension. Unless that is exercised, it automatically gets closed. Voluntary revision of bill of entry or shipping bill post clearance of goods. So there's no provision in law today that if I filed a bill of entry, I can revise it, right? And every bill of entry is said to be an assessment. So what happens in practice is that you filed a bill of entry, you cleared the customs from customs, and then you realize there is something amiss has happened. Either you paid the excess duty or you paid the short duty. Now you have to go through a normal appeal process. If it is excess short payment, you pay with the interest, nobody cares. But the problem is if you paid excess, then what happens, right? So then the authorities say, go and file a appeal, because every bill of entry is an assessment in itself. So now they've given a window for a voluntary revision of bill of entry or shipping bill. What we need to look out for is how this is going to get integrated in the IceGate. So IceGate is a portal where that customs follows. Whether it's going to be from a front end or it's going to be from a back end. If it is from a back end, then of course it's going to be another headache to manage the paperwork. What happens in case of a shortage of goods, difference in prices, what happens on that? And if you paid excess duty and now you go ahead and say I want to do a downward revision, and assuming for a moment that this is accepted, then mind you that the refund provision says it has to be done within 1 year. So the refund provision in customs gives you a window of 1 year, right? So keep that in mind if you want to kind of revise it, which means that whatever clearances that I've done, within 1 year I have to do whatever that I could do, otherwise the refund window shuts down. Now if you want to play interest and duty, of course you can any point in time. Okay, the settlement commission, the government has decided to discontinue it. So that option is not going to be there because they've realized that there are not many cases coming in. And last one is import of goods under concessional rate. So you have a scheme in which you can import goods. And of course there are certain conditions, the time limit for filing the end use conditions. So these are exemptions which are given for an end use. Let's say I want to manufacture certain goods for solar, so there is a lower rate of duty. Now I have to give certain documentary proof to make sure that I have done that. It has been increased from 6 months to 12 months because it was practically impossible to give those details. So this is pretty much about customs. You really see the changes are more to be optically correct and also procedurally be safe, right? Moving on to GST, and before I get into the GST, a little bit of a background about it is that look at the collection of GST today, right? So we started with something called 50,000 crore. That was the 2017, right? Now we are collecting almost like 1.75 lakh crore, right? Which is 101. I always struggle to kind of explain this number, 1,75,000 crore a month, right? And when we discuss with the guys who kind of frame the law, mostly with the policy maker, they say, no, there is something more to be collected, right? So there is some more potential around it, and indirect tax is going to kind of, especially the GST is going to lead the forefront for the purpose of collection of tax. So if you look at the amendment, it is more to say that, okay, where can I make a procedural relaxation? Secondly, where can I plug the loophole, right? And I'm going to kind of focus more on the plug the loophole part. The first part, and I've kind of numbered it for us to kind of make a reference to what I'm discussing. The first part is a retrospective amendment. Now, this is the first retrospective amendment that has come into GST. The earlier one was income tax, if I remember correctly, in case of Vodafone. There is a huge background to it. I don't want to get too technical about it, but will leave you with some thoughts. So this was about a case of Safari Retreat. The Safari Retreat, they had a mall, and they wanted to take input tax credit of the civil spend on the mall, because ultimately you rent out the mall, right? So the civil expenses has to be set off against the output liability paying on the mall. So it went till the Supreme Court, and the Supreme Court said, yes, you can take it. And the way Supreme Court read the restrictive provision of input tax credit. So input tax credit provision under GST is, yes, you can take it. No, you cannot take it. Within no, they made a distinction to say that something called plant. So there is an expression called plant and machinery. But at one place, interestingly enough, it was used plant or machinery, right? And then Supreme Court said that if I look at the draft GST bill, there it was plant and machinery. But now if I look at the final bill, there is a or. So it is a legislative intent to do or. How can you argue that it was a mistake? So, so they lost the case finally, and the credit was allowed, of course, subject to certain other examination by the High Court if a mall qualifies as plant. But meanwhile, the law committee met, and this happened in the month of November. They said, no, it's not doable. The intention was never there. We'll bring a retrospective amendment. And that's what they have brought in. A couple of issues on the retrospective amendment, right? And I want to kind of consciously make a statement here that please do not think that the issue is over. Please do not think the issue is over. Let's talk about 4 issues. First is what is the validity of the retrospective amendment? You hear, because these are the 4 questions you will keep hearing about this, right? So the validity, in our view, it's difficult to challenge, right? The government has a sovereign power. In the interest, public interest and all that, difficult to kind of, get into that territory, leave it for some other time. Review petition. So there is a review petition which is pending before the Supreme Court. So the government filed a review petition. The grounds, there were a few grounds which are raised in review petition. Now what we are hearing is that perhaps they'll withdraw it because there's already an amendment. What happens if the Supreme Court hears the review petition and pronounces something out of it? So that is something that we need to keep a watch out for. Now coming to a little slightly technical part, but this is very useful. Look, I don't want to kind of do a very deep dive analysis, but let me tell you a summary, okay, the gist of it. So if there is something which is qualifies as plant and machinery, and I am using it for my own account, I'll give you some example. For example, a data center. Okay, so now if you look at the data center is just not, it's a combination of few stacks. It has got a structure to it. The structure is built in a manner that only it can organize as a data center. You can't set an office there, right? Paint shop for that example. Even if it is used as on account, you are eligible to take credit, right? And people think that immovable property, once it is immovable, I cannot take credit, right? So we have encountered a situation where people will not take credit of the lift because they think it is immovable. We have encountered a situation where people will not take credit of HVAC system because they think it is immovable. Look at the definition. If it is own account, look at if you can take credit. Also pay attention to the Bharti Airtel ruling, which discusses the movability aspect in the context of telecom towers, right? So if it is movable, no question asked, take credit. If you think it is immovable, we'll have to analyze whether it forms part of plant and machinery or not. Coming to the last part of it, which is not own account. Now what is not own account? Like I've kind of built something, now I'm not using it, somebody else is using it, right? So effectively I'm letting it out. Can I take credit of it? Which was the question of Safari Retreat. To the reading that we've done in the last 50 hours, to us it looks like you can take credit, and what they needed to amend, they've not amended it, right? So the amendment is just at one place. This is an area which is going to come for a huge debate. This is an area which is going to come from a huge debate. There's going to be a difference in opinion. Let me tell you, the government believes that the credit should not be allowed, right? So this is one area that perhaps you'll see a lot of debate. Second is the smallest of all. Second is the amendment that you have introduced to say that if you issue a credit note and you can the credit note is going to be valid only if the recipient finally reverses his input tax liability. Now here comes the question that how do I know whether what has recipient done, right? So we are again landing ourselves in a territory where you used to say that, okay, the recipient has to file, the other guy has to file, my supplier has to file return on time. How do I know that, right? So IMS, which is Invoice Management System, which I'm going to kind of take it next, is a system that looks to us is going to be a kind of good system to rely on. The system is still under testing. We see a lot of litigations around this, right? And mind you, this is covering a situation other than discounts. The discounts, there is already a provision to take care of it, but other than discounts meaning what? Any kind of a price adjustments that you've done, right? So this is one area which is perhaps is going to receive a lot of attention from a litigation perspective. The documentation and the communication to the suppliers is the paramount importance, right? So I was talking to someone in the morning, he said that how do I kind of make sure, in our view, it is important to take the whole ecosystem with yourself. So it's important that if you kind of, educate the suppliers especially. Third is the smallest of all amendment, but the biggest of all impact. So what they've done is that they've changed the input tax provision, and there used to be a word called auto-populated statement. Now they have just changed it to statement. Now why they have done it? Because now they are going to come up with, so auto-populated statement means there is something called a GSTR 2B. What is GSTR 2B? The supplier files a return, my suppliers files return, and then it gets reflected there, and from there I take a credit, right, after matching the invoice. That is going to be, there's going to be another system that they are putting in called Invoice Management System. Everything flows into there, and from there you will have to either accept it or reject it. Now slightly technical for me to explain, but just remember there's a box coming in between the 2B, and the 2B then needs to be filtered out, which means that you have to kind of make sure that you operate that invoice management system. If you have not looked at it, please have a look at it, because this is something which is going to change the entire landscape of 2B, that reconciliation that we've been doing. There is a proposal which is number 4 to do a trace and track mechanism. The trace and track mechanism was something that was discussed in the last council meeting. They want to do a tracking of certain goods which are prone to evasion. What are the goods which are going to be coming in this? We are not very sure about it. I did hear somebody talking about steel. I don't know whether steel is going to be coming in, but the tobacco and the pan masala looks to be a kind of realistic. What needs to be looked at is that how it is going to get integrated with e-invoice and e-waybill, because e-invoice and e-waybill has an electronic signature into all transactions, right? But how do you integrate it vis-a-vis a particular product? The last one, input service distributor. So they've kind of done a, some sort of alignment. So earlier there was some lacuna where RCM transaction, which is a reverse charge transaction, from outside the state or from outside the India was not covered in there. Now this is one big change which is coming from 1st of April. This is going to be a big area of litigation. To give you a background of this change is that, look, what used to happen is if you make a centralized expense. So example is that, let's say I've got 5 offices and I have one recruiter for all the 5 offices, and I get invoices for all the 5 offices into one place, that is West Bengal, because it happens to be my head office, while the services are used at different places, and I used to take credit entirely in West Bengal. Now what used to happen is, because it's a state, the state thing is coming into picture, the consumption angle is coming into picture, so they made the input service distributor part mandatory on 1st of April 2025. And this is something which is beyond filing a return, because you need to now capture the expenses so that you are able to do distribution, right? So while there is a small change about IGST coming into picture, but our recommendation is look at the ISD preparedness for a 1st of April rollout. What's an impact on the IT system, because you can't do it on Excel. What's an impact on the tax processes, and what's an impact on the supplier side, right? Because if the supplier doesn't have ISD registration, then it's going to bill you on the same registration, and then you have to again go for a revision, right? So look at it. This is something it's not an option anymore. From 1st of April, if you decide to take credit at the same place where it is billed, however consumption is happening on some other places, then the credit is going to get denied. Yeah. So look at this provision. Okay. There is a change in terms of local authority. They have defined what a local authority and local fund and municipal fund. This was a long debate, because municipal, everybody knows what is municipal, because normally you have a municipal name attached to it. But something like Delhi Development Authority, right? Can you call it to be a municipal fund? So they've given a local fund definition. So now the impact of this is that look at the definition wherever there is any payment happening to these, semi-government bodies. Government is pretty much clear. So one of the example that was given was there are certain fees which are paid for exploration. Now, so when you pay an exploration, it is not going to the government, but there is a local fund that they have constituted. So there are twin impact. In certain transactions with those funds, which means I'm providing a service, there may be a lower rate available, right? The second thing is that if it qualifies to be a government or governmental authority, then a reverse charge mechanism comes into picture, right? So all the payment needs to be looked at in the context of local fund definition. Supplies between special economic zone and free trade warehousing zone, this was lacking because they had a bonded warehouse definition, and the bonded warehouse definition used to take it to the customs. The customs definition was not governing special economic zone, so there's a kind of a fine tuning that has happened. What is not very clear is, so what is clear is between special economic zone to the special economic zone, no tax, no supplies, free trade to special economic zone, no supplies. But what happens when you clear it to a manufacturer of goods in the bonded warehouse, the mover scheme? That is still a question open, because if you get supplies from SEZ or FTWZ to the mover, then what happens, the question is open. The time and respect of supply of vouchers has been deleted. Now this is a pretty kind of a, this is one example where you see things going wrong. So the background is this, that there was a mention of time of supply for vouchers. Now the big debate was whether vouchers was at all taxable or not. How the tax authorities read it, because there is a specific provision for time of supply, it is taxable, right? And it took 7 years for us to get a clarity, no, vouchers are not taxable, and now they've deleted the time of supply provision. This again gives you kind of a, some sort of a feeling that if there is a way to kind of ask tax, nobody was going to leave that. Okay, so last one is mandatory pre-deposit of 10% for filing appeal. So if you want to kind of contend only a penalty, let's say, there was a confusion that what do you do? So now they have clarified, saying that you have to pay 10% which is payable, just like in case of a tax. So if you want to kind of only litigate penalty, still you have to pay 10% of the penalty. So I'm done with the presentation. See, look, my summary of these entire budget changes are, number one, that they are going to be introducing certain measures to check the evasion of tax, which is like IMS. Then also make sure that the revenue is going to the consuming state, which is ISD. There are litigations that are coming up at the Supreme Court level, and mostly to do with the credit, mostly to do with the onus to prove that my supplier has done his compliances. These are going to be more and more kind of coming in more closely, and that is where I said that look, what is needed is to make sure that we do the compliances. um, and especially the new compliances. So what are the new compliances? One is the invoice management system that takes a bit of a, getting used to it. Can't do it in Excel, mind you. Second is the input service distributor, which is coming from 1st of April. Lastly, I would remind that Safari Retreat, it's a loaded topic. Please do not kind of go by anybody saying, oh, the amendment aa gaya, to retrospective to khatam ho gaya, kuch nahi hone wala hai iska, or somebody tells you, okay, iska ye. So, I mean, I would recommend that get into a little bit of a debate, try understand it, not very difficult, but not really kind of, the senior councils themselves are finding it kind of difference in opinion on this. Okay, in the last 50 hours, that's what we have discovered. So all is not lost on that count. That's all about it. Thank you so much for your time. Yeah.
Thank you. I request Ms. Angana Ghorai Chaudhuri, Assistant Director General from Bengal Chamber, to please present mementos to the speakers, Mr. Saurav Kedia and Mr. Priyojit Ghosh. Thank you. We will take a couple of minutes for the changeover for proceeding for the industry session. We will start our next session, the industry perspectives on the Union Budget 25-26. I request the moderator and the panelists to please be on the dais. Mr. Pinaki Chaudhuri, Co-Chairperson, National Fiscal Affairs and Taxation Committee, the Bengal Chamber of Commerce and Industry. Mr. Dwarkanath, Partner, Pricewaterhouse and Company. Mr. Kaushik Ghosh, CFO, Berger Paints. Ms. Nidhi Jain, General Manager East from Hindustan Unilever. Mr. Arnab Devgupta, Regional COO East from Manipal Hospitals. And Mr. Sunil Somani, Director from Somani Apparel Private Limited. I request Mr. Chaudhuri to please take the session forward.
Good evening, everyone. And as we get started with the last session of today's evening here in Bengal Chamber, so we would try to keep it like the thoughts that has been shared by Dr. Sarkar as well as Mr. Ghosh. Before we get into that, I mean, Sharbani has already introduced from the organizations they are coming from, and we would try to ring fence this basically what Mr. Ghosh has mentioned, that the union budget of this year continues to be on the premise of Gyan, and the way I understand what he has mentioned, Gyan means Garib, Yuva, Annadata and Nari. And we will also ring fence the industry perspectives, right, within the 5 pillars that the finance minister has basically laid out as she laid out the union budget of this year. That is basically accentuating growth and invigorating private sector investments and securing inclusive development and uplifting the household spends, and not the least uplifting the middle class, aiming to uplift the middle class, right? So getting straight down to the discussions, we have a broad array of industry experts in here, and I would like to pick up the last of the ones to start with, as I have mentioned, that is about the middle class, right? So this is on to Nidhi, if I may, right? And before I get to Nidhi, let me set the context as I pick up from the theme of the middle class. The Prime Minister has mentioned that may Ma Lakshmi shine on every middle class and for that matter shine on every household. And this is consequent to possibly the Finance Minister's addressal so far as the tax reforms are concerned on the personal tax front, right? The earlier speakers have also touched upon, be it from the taxation, Saurav has touched upon, and Dr. Sarkar has also touched upon that there is expected to be some surplus in the hands of the people, of the salaried people, right? The disposable income because of this rationalization of this tax. And Dr. Sarkar has also basically corrected that it is to be seen from 7 lakhs to 12 lakhs because 7 lakhs was already exempt till about last year, right? So with all of these, Nidhi, how do you see the perspectives are going to basically boost the FMCG sector and for that matter any other sector in the economy like the automobiles, etc.? And if I can also add an anecdote to that or a supplementary question to that is that how do you see could be the business strategies at this juncture, particularly for the FMCG companies, to strategize and align their business strategies, right, to harness the maximum while the wisdom will be still left to the people to decide the proportion of consumption and investment?
Thanks, Pinaki. So first, few principles. Number one, if you see in the last 12 months, what are the challenges our economy has been facing can be typically, bucketed into two broad buckets. One is the demand or the growth, lack of growth, especially for businesses, and second, the liquidity. I mean, I remember, since 6 months before the elections, the national elections, the conversation was around that after election, the liquidity will improve. Then after election, maybe another 2 months, liquidity will improve. But liquidity didn't improve in the economy and the inflation had to be managed very, very tightly. So if we see this budget in particular per se, as Dr. Sarkar also mentioned, there is boost to both. There is an intended boost to the demand generation. There is an intended design in the whole budget which will also improve the liquidity. So both the factors augurs really well for the FMCG or any industry, not just FMCG but in business in general. That's one. Second, some of you might have attended the earlier session of BCCI where Dr. Amit Mitra had spoken about that in country like India, you have to generate or create the demand and then the supply will follow. Now different economists of course may have different point of view, but the cycle in which our economy has been going, the demand had to be created first and the supply will automatically follow. And as Dr. Sarkar also mentioned, that budget does cover the supply side also, it has not left it behind. Now coming to the business or specifically how this budget will help the FMCG industry or overall industry as well. India is poised to grow with the demographic dividend. And if you refer one of the reports of Bain and World Economic Forum, it talks about how India will become from a pyramid-shaped economy where you have more lower class people or lower strata people in 2006 to a diamond-shaped economy where the middle income or the higher middle income group, which is in the range of $8,000 to $40,000 income per household income, will increase, and the belly will be on the upper middle class by 2030, is the World Economic Forum and Bain study suggests, which means that the consumers of Indian economy are poised to aspire, poised to grow, poised to demand more premium products. And while there will still be people who will come from not consuming today to consumption of branded products or the FMCG products in general. Coming back to the budget, hence this entire money in the hands of household, which is 1 lakh crore, which is a very big money. And if I take a approximate ratio of 20% saving, it means 80% of it that layer typically ends up consuming. I mean, you know, there is no scientific study to do it, but in general, it's safe to assume that that layer consume or spends 80% of what comes in their hand. Of course, that's an assumption. But with 80%, the multiplier effect is 5 times as per the economic principles, etc. Which means that much consumption is going to come in the economy. And that should ideally help all the industries and not just FMCG. And to your second question, how will FMCG or any industry will, you know, create different strategy? I think it's simple. India is aspiring. It is going to have the demographic dividend in terms of more population, more women coming to the work, with budget having put a lot of focus on demand generation as well as on employment generation, which will take slightly longer time, but the right step. The businesses are poised to grow in a multiplier effect, is my opinion.
Thanks, Nidhi, for your perspectives. I think this is very helpful because when we heard Dr. Sarkar left it to the people as to what could be the proportion which we can definitely anticipate, which will be the surplus, whether it will be spent on investment and how much will be spent on consumption. So Nidhi is quite bullish, if I may say so, and I wouldn't be biased on that, but if I may also agree with her because it's a young country, young population. So when people are left, when people are left with more money in their hands, the tendency could be going for more consumption, which is basically accentuating the growth across all the sectors of the economy, right? And definitely the strategies you have mentioned for various companies, including FMCG, is very insightful. Now moving on from here to of middle class, a bit to the pharma part of it, I know if I can come to you. While I don't remember the data as I was hearing the finance minister laying out the budget, but roughly if I can remember that she was mentioning that 36 life-saving drugs are expected to be made exempt from the basic customs duty. About 6 life-saving medicines will be made available at concessional duty possibly. And not the list, I again don't remember the number about the daycare cancer thing in the hospitals. That's about 200 odd, I think, right? All of this, and that added to Nirmala Sitharaman mentioning as part of her addressal, so far as the third engine of investment is concerned, basically the intent to expand the entire medical education, right, by creating more bandwidth, if not about 110,000 more seats, so far as
10,000.
Sorry,
10,000 seats more.
10,000 seats more, so far as these medical universities are concerned. So, question to you specifically for this evening is that how do you see these concessions and the exemptions? Do you think from your expert perspective that these are enough or should there be more, right? And secondly, more importantly, as we see the people front, how do you see these measures are going to address the requirement and the availability of the skilled medical professional in the Indian medical industry?
Right. Sure, thanks. Thank you very much. So when you look at healthcare, you look at it through 3 different lenses, fundamentally. One is your affordability, one is accessibility, and third is quality, right? So any budget that needs to be looked at also has to be looked at from these 3 lenses. So if you look at first from the affordability point of view, the flagship program of the government is the PMJY Ayushman Bharat scheme, which runs. I mean, that was, if you look back about a decade before this, less than 5% of the population was actually having any kind of health insurance. And then came the universalization of healthcare, and Swasthya Sathi is a classic example in our state, Ayushman Bharat across the country. And that really changed the dynamics of how underprivileged people could get access to very good quality healthcare, not limited to the government facilities, but across all the private sector. So in this particular budget, they have increased the allocation by almost 2,000 crores only towards PMJY. I think that's a very big move, and will only facilitate expansion. What has happened very interestingly is it has not only allowed people to access better healthcare, it has also seen a boost of healthcare infrastructure beyond the cities, which is where we need them to actually go, because you still have 60-65% of the population who don't stay in the cities, peri-urban and other areas, and we have seen a huge increase in number of healthcare infrastructure coming up across the districts. And what the government also did interestingly was link it to the NABH accreditation standards. Said if you are accredited, only then can you get empaneled under the Ayushman Bharat scheme. So it has not only seen number of hospitals coming up or increasing capacity, it has also seen a multi-fold increase in the quality of healthcare being delivered across the country. And that's very, very, yes, there are challenges, the payment issues and stuff which needs to be sorted out, but I think given the larger intent of the government, I think that's got addressed in a big way. So the affordability is a tick mark. They have done well on that. Access remains a concern in our country. Again, the rural-urban divide is a reality. And how do you bridge that? There's nothing else other than technology that can do that, and which is, again, so there is a lot of focus on AI, the focus on digital health, and that will allow us to actually deliver healthcare far beyond the cities. And we're talking of critical care, talking of not only consultation. So there are various models, and there are a lot of entrepreneurial opportunities emerging in the digital health. And with advent of AI, the way it is suddenly taken up, I think next 5 years, there'll be a huge amount of leverage that will be taken through this budget, and its advantages there. So yes, on accessibility, yes, on affordability. Cancer is a epidemic in my mind. We have almost 1.5 million new cancer patients getting added to our country every year. Yeah? And not to mention the people who are already ailing. We don't have adequate cancer centers in the country. Cancer has 3 modalities. Some people need to get treated through medicines and surgery and radiation, all through. So what this budget has done is, while radiation is a difficult thing to be established everywhere, basic chemotherapy is going to be made available across all district hospitals in the country, which is a big one. Yeah? Daycare treatment is being made available across, and there are 36 crucial medicines. The chemotherapy drugs, they have brought down the duty. So it will make it more affordable again in terms of the healthcare that's being approached. What I would have expected the government to go a little bit further beyond that was there's a huge duty on the radiation machines in our country. Each of the machines, the linear accelerators as they're called, we have to import them. We don't manufacture them in our country yet. Only 2 companies in the world manufacture that. Each machine costs about 25 crores, the state of the art. And there's a 37% duty on those equipment. So that is fundamentally very, very expensive and makes radiation. We have only about 700 machines in the country today, and we need at least another 1,000 more machines today with the present prevalence of disease. So there's going to be a huge amount of investment, but again, the duties, I think that's something which we are hoping in the supplementary budget or an addendum, if that could be addressed, because this was a recommendation that we've been making to the government for a while. Because largely we're trying to bring down the cost of cancer care, so this is quite a contra from that point of view. And last from my point of view was the medical education piece. Yes, there's a huge deficit in the number of doctors available to the number of doctors required, and we have the infrastructure, so you don't need to build additional medical colleges. Within the existing medical colleges, you can have a significant upgradation number of students. You know, all you need to build is new hostels. You have the classrooms, you have the land, 20 acres of land. I would have loved to see something around digital education on the medical education part, because what we don't have is teachers. We have more number of seats being created, but where are the teachers? Who's going to teach them? I think a doctor, professor sitting in All India Institute of Medical Science in Delhi should be able to teach somebody in, say, in AIIMS in Guwahati. I mean, why not? A lot of subjects are theoretical, right? Those can be taught. I mean, there has to be a mechanism where we can, and there are simulators today which are as good as the real human body, and we've seen those being developed in the West. Those are things which are going to come in as we go forward. So I would give a thumbs up from all the three aspects that I would look at it to this budget, a big leap forward.
I think that's extremely helpful, getting the inside. Thank you so much. Getting the out view so very quickly, and as you say that this is like laying the foundation for the next 5 years, and good to know. We were not aware, at least I was not aware, that the extra capacity that is being built is already possible within the colleges that's available, so that won't basically require much time to have it applied. The concern you are leaving behind is basically the expense side so far as the radiation machines are concerned. And this also resonates well when I was hearing Dr. Trehan, founder and managing director of Medanta. He was also mentioning, and this is not basically macroeconomics, this is for the humanitarian ground, that these daycare centers are really going to be of immense help for the cancer patients who today are required to travel long distance, right, for even injections and chemotherapy and the related treatments, right. So your concern about the machine is noted, while in case of Nidhi, it was like she affirmed that Lakshmi will also shine on the top lines and the earnings of the respective companies. So shifting gear from there, coming to Dwark, a bit of technicalities from the core industries. The finance minister has actually talked about tax reforms. We started off, and Dr. Sarkar also mentioned, like rationalization of the TDS, TCS, by increasing the threshold in case of TDS of senior citizens from 50,000 to 100,000, and the TCS limits raised from 7 lakhs to 10 lakhs. But more importantly, this could be more mechanical and mathematical. More importantly, towards ease of doing business, she has also deliberated basically to look into the FDI conditions with the intent to simplify it, right? That is towards ease of doing business and speedy corporate mergers. And last but not least, I can't stop myself, which is fair or unfair, I don't know, because all the things which we are discussing is about what has been tabled on Saturday, but this is something on a preemptive basis, that the income tax bill, which is to be tabled yet, right? What could be your thoughts around all these tax reforms and the transformation that we can expect so far as the new legislation which is expected this week?
Thanks. Thanks, Pinaki. I think you're asking me to gaze into the crystal ball a little bit. But I think Saurabh did it beautifully before me when he said that this year the finance minister took 74 minutes for her speech versus 120 minutes in the past. And I think that seems to be the direction in which the government is headed. They want simplicity with regard to tax law, and this has been a long-standing demand of each one of us, whether you're a corporate taxpayer or whether you're an individual taxpayer. The reality is that the law today is bulky, inaccessible to most people, and not amenable to the situation or the world that we live in today. So I think the first thing that I would expect, based on her announcements, is that the law that is hopefully going to be tabled this week will be simpler and much shorter than what the current law is. That said, I would hope for a few things. First and foremost, what is it that businesses look for? Businesses look for two things. They want some sort of cohesion or some sort of clarity with regard to how provisions of law will be interpreted. And second, they want certainty, because end of the day, you invest in your business on the basis of an understanding of how things will pan out. If you keep changing that every year in a budget, and India is one of the few countries where we spend hours and hours on panels debating a budget because it's almost like a life event. That is not how it should be. A budget should not even make it to the beyond the first page of the newspaper for one day. That is the amount of certainty that I would want the finance minister to bring in whenever a new tax bill is brought in. So that's the first point. The second point is, today we are saying that we have an ambition as a country to be the third largest economy, maybe even grow beyond that. Now, in order to do that, we have to fuel certain things. We have to be very, very future looking. We've lost the war for manufacturing, if you ask me. We lost it decades back. We moved from agriculture to services. We missed the manufacturing revolution. Today we are trying to play catch up, and I know in all these forums we love talking about China +1, but the reality is that China, that +1 has become Vietnam or Thailand or Malaysia and not as much India. So we've lost, truthfully, the manufacturing race. So what are the races that today we cannot afford to lose? That is where the government must be investing their time, and that is what our new tax policy should reflect. For example, are we going to win the race to space? Are we going to win the race on artificial intelligence? Today we talk about Gen AI, today we talk about DeepSeek, and now we are announcing some sort of a corpus or a fund of funds for artificial intelligence, but the world is already ahead. So how are we going to enable some of these kind of industries which are going to be our future and going to spur the economy? And I would love to see that coming in the finance bill. What are we doing with regard to things like climate change? Right? Again, if we have a net zero goal by 2070, then there has to be a very clear policy about what are we doing from now to 2030, what are we doing from 30 to 47, what are we going to do beyond 47. So we really, really have to be future looking. So I think these two aspects, Pinaki, from my standpoint, one is just the simplicity and absolute certainty. I, for one, will be delighted. I know Mr. Mukherjee is looking at me, he's not going to like this, but I, for one, will be delighted if the session that perhaps we do after the presentation by the finance minister in this coming bill is the last one that we do for a decade when it comes to tax policy. I really hope that is the amount of simplicity that we bring in tax policy. I know that's just a pipe dream. It is not going to happen because there is reality. And I hope that we are very future looking in terms of the industries that we really want to give impetus to so that we achieve our goals as a country.
Right, Dwarak. I mean, this resonates well with the brevity the Honorable Finance Minister touched upon. In addition to saying that the income tax bill is coming this week, she mentioned that simplicity is expected. She also mentioned two other things along with this, and you have also touched upon one, that is basically tax certainty, and the other thing which has not touched upon, we will leave it here, right? That's quite debatable and take hours to discuss, that is reduction of litigation. So we might want to wait and watch till it comes. That's number one. And the second thing, you have also made a strong statement so far as missing the race from agriculture to manufacturing and straight away a jump or a shift to the services industry, right? While we know that definitely, I mean, 5 years back also, I don't know the present data, that more than 60% of the GDP is contributed from the services sector. Be it as it may, manufacturing, I don't know how much does it contribute, if it is like 15%, but there are a lot of talks. So time permitting, maybe we will pick up this thread to talk about a bit about manufacturing and the focus of India there, right? So for now, moving to Sunil, right? So far as the textile industry is concerned. So this budget, the finance minister in the budget speech has mentioned about a 5-year mission to boost cotton farming, right? Right. So possibly with the intent to increase productivity and sustainability, right? So do you think that this is going to bolster the textile industry? But that's not the main question. The main question and the insights from you from the textile industry perspective, which is a very important industry in our country, that is that enough, or should more or different impetus was expected from the textile industry people?
The Finance Minister Nirmala Sitharaman has announced an ambitious 500 crore of 5-year plan to boost cotton production. Our cotton production, the yield is very low in our country compared to global. The data is the India has no surplus in cotton and its yield is 450 kilogram per hectare. It is one of the lowest against a global average of 800 kilogram plus. So this named Cotton Mission, the scheme aims to rejuvenate India's textile sector. And the budget allocation for this textile sector has a steep increase from FY25 to 3342 crore to 5252 crore, mainly for the amended technology upgradation fund scheme and production linked incentives, ensuring faster disbursement of incentive funds to the industry. So let me tell you about something about textile industry. The textile industry is one of the oldest and largest industries in India, playing a significant role in our country's economy. The textile industry is the second largest employment generator in India after agriculture. It accounts for around 10% of India's GDP and 15% of country's export earnings. The industry is divided into several segments, including cotton, synthetic and blended textile. So the challenges, the textile sector in India is facing a multitude of challenges, including fluctuating raw material costs, with prices of cotton and synthetic fibers impacting production cost and profit margins. Another significant issue is the shortage of quality raw materials, with India relying heavily on cotton imports due to its own limited production. The sector is also struggling with outdated technology, particularly in small-scale enterprises, which hinders its ability to meet global standards. And additionally, the tax structure, including the goods and services tax, makes clothing expensive and uncompetitive in domestic and foreign markets. So, what are the several strategies can be implemented? It can be adoption of modern machinery and automation to improve efficiency, productivity, and quality. Develop a stable and competitive tax structure, simplify the tax system, reduce tax rates, and provide incentive for exports to make the industry more competitive. And increase the domestic production of raw materials such as cotton and explore alternative sources to reduce dependence on imports. And we need to develop world-class infrastructure, including...
So, Sunil, just interjecting there,
yes.
As you were mentioning about the imports, so are you saying that there is an import dependency at the moment which is going to be eased out with this measure?
Yes, it will be eased out because the 5-year mission for this government is to improve the cotton yield in our country.
And you have also mentioned about, from her speech and by yourself, about the technology in this industry, which is a very old industry. So can you just make a mention something more about the technology, about what is the current technology at the moment and what's going to happen in the coming years with these measures?
Being in a textile sector, there are many technologies regarding to software. The cutting mechanism, this is auto cutter. We can, like in my factory, I have imported one cutter from Italy. By importing, we have to pay custom duty. There is high custom duty if you have to import. So there should be some tax structure like that. We don't have to pay that much custom duty. Also, we have to pay GST on that also, which is more than 23%.
Understood. So in summary, do you think this measure is the right impetus, or were there some more wish list given the stature of the industry?
Regarding import of machinery, I need some changes to some tax structure, which was missing in this budget.
So your concerns in here is largely onto the technology that you want to leave behind,
yes.
Right? All right, we will again come back on some other things. Now, moving on to Kaushik, right? We are talking about a lot what has been laid out in the budget, but if we just take a quick look at the economic survey that has been placed just ahead of the budget, right? That talks about and iterates well that there has to be a good coordinated efforts between the private sector, government and the academia to create the workforce or the workplace of the future, right? and that is aimed at, while using artificial intelligence enabled services, that should be basically aimed at emboldening the labor, right, augmenting the labor, and not replacing them, right? So with that theme in the economic survey, Kaushik, what could be your thoughts as to how industry is going to leverage this? And if I just phrase it a bit differently than leveraging, if I may say, how the industry is going to strike the optimal balance between the use of new age technology, which is evolving, and definitely it will continue to evolve, and the use of skilled and to be skilled workforce. Of course, with the ultimate objective of efficiency, so far as controls and compliances are concerned.
Thanks, Pinaki. A very good evening to all of you. So, Pinaki, I'll take a step back. So, we have been hearing for far too long that we are a developing economy. From a developing economy to a little bit more developed or a fast developed economy, the two prime requirements are rapid urbanization and skill development. So, taking a cue from there, and in this evolving technology of artificial intelligence, the real opportunity lies in how well we integrate these new age technologies with our human expertise. That's the first and foremost requirement. The integration, the plan has to be laid down very well. So while we are looking for, so technically if you see, this has to be looked as a catalyst for productivity, increasing the productivity. The announcement of Center of Excellence in AI for Education in this budget is a very welcome move. Maybe we are looking to become a global leader in the AI labor market. If you go back to Y2K in those days. The move aligns with the government's vision in integrating AI with institutions like IIT and Indian Institute of Science, which has been planned. So in this development has to be very well.
I think this budget also addressed about
Correct.
IITs in a big way as part of the investment
at the R&D
engines
centers, at the R&D
which
centers.
looks after people and innovation.
So to do this, the first is to have a very clear ground plan, and in no way it has first, there is a misconception that AI is going to, this artificial intelligence is going to come and eat into the jobs. So rather than that, it has to be looked at as it is going to complement each other. I mean, end of the day, AI is developed by humans. So it's kind of here to complement each other. How best we can take this predictive analysis in way forward, so that we can use it more efficiently, we can save time, is what we have to look up to.
So, right, Kaushik, take your points that you are quite bullish about the optimal utilization and not exactly sensing much of the vulnerability when it comes to optimal utilization of the both, right?
True.
So, Nidhi, may I also request some comments from you on this optimal utilization between the technology and the workforce?
Sure. Thanks, Pinaki. See, every risk comes with the opportunity, and every opportunity has the risk, is the bottom line of whatever we do. Yeah. So going back, as Mr. Kaushik also suggested, that when the computers came, whether in the world or in India, people were worried about like what will happen to the workforce, will it mean lesser job, etc. Similarly, when internet, etc. came into the world or in India, it starts to doubt what will happen to consulting. I started my career as a consultant, and at that time, our knowledge was our biggest asset. And this forum is organized by PwC. It was a real threat at that time because everything was, whether right or wrong, available on Google. But over a period of time, the business also evolved, the technology also evolved, and now they complement each other. Similarly, when it comes to artificial intelligence, there are a lot of risks, attached to it in our mind that, oh, what will happen to people? And actually, AI can be used to replace a lot of mundane job. Some of you who have worked in SAP or in some systems where, you know, the person has to just sit and keep clicking to ensure the month-end process runs quickly or runs on the scheduled time. Now, all of that can be definitely done by the bots. Coming to AI, you can always, you know, give your mundane job to the AI so that the natural intelligence or the human brains can do more productive or more creative work. The last point I also want to bring here is, I don't think AI or the capability in AI and development of it is anymore a choice. If we don't do it, we will be left behind. If you see the kind of frauds which are happening in the financial space, if you don't use AI, you don't use data science, you will not be able to put the leading and the lagging indicators. You will not be able to put the control framework around it. In fact, using this, you can manage such large transactions, identify the outliers using AI, and do the investigation. It's like, because you talked about controls and compliances, that's why I'm giving this example. So you can always find how you use AI more productively in your business. Of course, there will be impact on the labor, but that impact, in my opinion, will be more in the space of that how you do more upgrade job than doing the basic fundamental. And AI is, in my opinion, not a choice. It's something which we really need to adopt.
So I think that's very well articulated, saying that it's not a choice, it's a necessity, because over a period of time, what basically changes theme between necessity, comfort and luxury that we have seen. And very true that we can't but to use AI, but the thing is to have it used in a judicious way, right, without causing much of the disruption. But last but not least, I think I would leave it there, your statement, the opportunity in crisis, right? So we will be able to navigate it that way as we cross the bridge in striking the balance between workforce and usage of AI-enabled services, right? Very quickly, I just don't want to miss, even with the paucity of time left, Sunil, want to take a quick thought from you, right? The Honorable Finance Minister has mentioned in the second engine, just next to agriculture, the MSME, right? So I just want to keep it brief and broad for you, right, and for all of us, right? She talked about focusing about 7.5 crores MSME workers. She talked about extending loans up to 20 crore and quote unquote on well-run MSMEs, right? So we don't know, at least I haven't seen the fine prints as to what could be basically qualifying as well-run, if there are thresholds or thresholds will be coming up, or it will be something which will be decided by the government, right? On this count, and it also talked about making India as the global hub of manufacturing toys and various other things. So with all these thoughts mentioned in her budget speech, how do you think that, is it enough for a very important thing which Dr. Sarkar has also mentioned, which is MSME? We will not get into cross-border. We are not going to compare China, but let's talk about from Indian perspectives.
Okay. The finance minister highlighted MSME are the second engine of growth in India, accounting for 45% of our country's exports. So to further support their development, the finance minister has introduced customized credit cards for MSMEs, fund of funds for startups, and an expanded fund of funds with a wider scope, all designed to improve capital access. So the last revision in the MSME definition was made during 2020 post-COVID. Currently over 1 crore registered MSME employing 7.5 crore people and generating 36% of our manufacturing have come together to position India as a global manufacturing hub. With their quality products, these MSMEs are responsible for 45% of our exports. To help them achieve higher efficiencies of scale, technology collaboration and better access to capital, the investment and turnover limits for classification of all MSMEs will be enhanced to 2.5 and 2 times respectively. Accordingly, the revised investment criteria would be 2.5 crore from current 1 crore for micro enterprises, 25 crore from current 10 crore for small enterprises, and 125 crore from current 50 crore for medium enterprises. The revised...
So, Sunil, are all these measures today poised to address what it should address so far as MSME in our country is concerned?
So the number of MSMEs in the criteria has been changed. The number of MSME will come, like it will increase the number of SMEs, and the banking and all the sector are giving support to all MSMEs. What support will get, like the credit guarantee amount approved had doubled in FY24 to 2 lakh crore, the highest ever in a single financial year, vis-a-vis 1.04 lakh crore in FY23. So what are the help, like if we get access to credit, it will help. The credit guarantee scheme provides a guarantee to banks and financial institutions, enabling them to lend to MSME without requiring collateral or other security. And it reduces the scheme lending for banks and financial institutions. Credit guarantee provides safety.
Overall, are you giving a thumbs up or part
thumbs up for MSME and for this credit guarantee? That I will say, because I have taken CGTSME loan from bank for working capital, and the limit was 2 CR sometime. Now it has increased.
That's good to hear that MSME has been addressed well. In any case, that has been addressed as the second engine in her budget speech, right? So another important thing which we don't want to miss out basically, right? I will come to work on that. Basically, in the budget speech, the Honorable Finance Minister has mentioned that a national topic or something is going to be formulated, national framework is going to be formulated with the intent to give guidance to the states towards promoting global capability centers, right? So GCC, I think, is a buzzword today, right? And for a country like ours, I was reading Sunday newspaper, which talks about that 2 GCCs possibly have come up every week, right? And the total number now shoots up to about 1,700 centers employing, I don't know how many, right? So do you think that there could be some challenges so far as the right talent is concerned, so far as the implementation of this scheme and the idea is concerned, along with the infrastructure requirement that could be required in Tier 2 cities? But having said that, I think it's fascinating to know, because this is something which is going to generate employment, which in turn is expected to have more consumption in the economy and ultimately growth of the economy, right? So how are Tier 2 cities also going to transform in this endeavor? But Dwark, you can just keep it short.
Sure.
I'm mindful about the time.
Sure. So the simple answer is that I believe this is a really good move. There was a crying need for some sort of a national framework to come into place. At this point in time, different states have been coming up with their own framework. Karnataka has a draft one, Maharashtra has a draft one, Tamil Nadu has a draft one, etc. So I think it's good that they've come up with or they will come up with a national framework. This is, in my own career, this is the third wave that I'm seeing, right? There was the dot-coms in 2000. Post the global financial crisis, we started calling them ITES, and now we're calling them global capability centers. The reason why I'm bringing that about is that when you talk of GCCs, there are 2 distinct sets of them. There is one which I believe are really going up the value chain. They are the ones who are doing serious R&D, so-called intellectual property coming up, and so on. Those require high-end engineering students, for which I believe at this point in time there is no dearth in India, even in Tier 2 cities. There are plenty of them, excellent colleges, excellent students being churned out. The second are the lower end, where they are process driven, treasury functions, accounting, payroll, bookkeeping, etc. Those processes can be trained or taught. So there again, you have sufficient talent which is available in Tier 2 and Tier 3 cities. I think the question is going to be, how quickly can we develop the infrastructure in those cities? How quickly can we develop the social environment in those cities, things like schooling, hospitals, make them more livable in a manner of speaking, such that people do not feel the need to migrate from those cities to larger cities. So if we are able to get that construct right very quickly, I don't see any reason why this policy should not succeed.
Right, Dwarak. So your thrust is more onto the infrastructure, as we all thought, rather than on talents, which you say are in abundance, or at least can be molded towards the desired requirements, right? So I just want to touch upon very quickly, as I promised, that Dwarak, you have mentioned about the, from agriculture to services. So the much heard about thing that is Make in India, right? And it can be for anyone, right? Kaushik, you can also take it, right? But very briefly, and that has also been reiterated by the Honorable Finance Minister in this budget again, as the manufacturing mission, right? So how do you see this in context to talent, technology and infrastructure? But just less than 30 seconds, please. Any one of you who would.
I'll take 30 seconds.
Yeah.
In my belief, it's important that we push through land reform and we push through labor reform. If we can do these two things, manufacturing will start getting more momentum.
Okay, that's fantastic. And just to conclude, that as we have spoken and heard about Make in India, but what at least I haven't heard about till last Saturday is Heal in India, right? Just to have that bridge, I will come to you, Arnav, right? That the finance minister has mentioned about medical tourism, right? So what do you think the hospitals are required to do, if at all any, right? To augment their facilities to deal with the international patients, right? In terms of technology as well as other facilities. But just be brief.
No, I will. I mean, honestly, it's a paradox, because the number of beds that we have in our country vis-a-vis what we require to treat our own patients in our country is not adequate. So tourism is slightly superfluous to that extent if we do justice to our own patients. There's no dearth of patients in this country. But having said that, we still have 600,000 people coming to India from across our neighborhood. Bangladesh is hurting a lot of hospitals just now. Patients are not coming through, but the idea of getting better visas that's appreciated. I think that entire thing can be really made more streamlined. When they come in, you can have a counter right at the airport where they can be fast-tracked, and these are very simple measures that can be done. That will definitely help, and we deliver quite decent healthcare at a very decent cost compared to most other countries. So I think, and we're technically also technologically quite equipped. So, but yes, touching upon Make in India, if we can actually bring those cancer equipment, build them in India, I think we can bring down cost of care by at least another 30% from where we are today. So health sector would really benefit from Make in India.
All right. So as you say that the plate is already full, and particularly from the neighboring countries, it's more fancy so far as the international medical tourism beyond the neighboring countries and from overseas is concerned, right? So we leave it there for this evening, right? And we would like to conclude from Dr. Sarkar and Mr. Ghosh and the simmering discussion what we have had, that we will definitely keep an eye as to how the balance is struck between what Dr. Sarkar has also mentioned and articulated well about the growth, which is range bound expected in the next year between 6.3 to 6.8%, and also to taper the fiscal deficit to 4.4% next fiscal from the current revised of 4.8% this year. And definitely it will be our collective endeavor as Indians to see ourselves as a 5 trillion economy very soon. How soon? We would leave it to all of you, right? While I was hearing Jyotiraditya Scindia mentioning that it is as soon as by end of FY26, but be it as it may, definitely our endeavor continues to be the third largest economy in the world very soon in the coming years, right? And I leave it to the organizers, please, right? Should there be time for questions, because we are just on top of the hour, 45 minutes, right? So from the participants, we are inviting question to any of the panelists in here. Yes, please. I think I saw your hand first. Okay, please. Sunil.
Increase the textile sector by boosting those benefits that we had discussed. But just recent 1 month back in GST, there was a GOM in which it was not officially announced, but it came to the social medias that government is planning to increase the rates of the specific items above 10,000 MRP to 28% and all those things. So I think that would have impacted the textile sector. So in just 1 month there is a flip. So I'm not clear about the textile sector, how government is looking into a long-term trend for this, because in GST it is adverse, in direct tax it is giving a positive benefits. So that ambiguity in textile sector, how textile sector will go on, in which direction?
You are talking about the rates, higher premium
higher
products.
rates on the MRP above 10,000 as a luxury item, so that will impact the B2C businesses.
Yes, obviously.
For sure. Because
so
that
the government is also planning some simplification in tax structure for all the rates. This is not yet finalized now. So it will be finalized. This, I will say that it's like lagging here in the tax structure for GST here.
Favorable tax structure in GST?
Yes.
Okay, thank you.
Maybe we can have one last question before we formally conclude.
My question to ma'am, Jen ma'am. She talked about some bullishness in demand side, and there would be plenty of excess money due to this tax benefit that has been given. So is there any scope of price decrease of FMCG product or per se for any other product which are manufactured? Any because there will be boost in demand as well as you can scale your business due to this excess demand. Is there any scope or possibility for reducing your FMCG product so that the Indian, all the middle class or all everybody could be benefited?
Oh, absolutely. I mean, see, pricing is a very complex subject. It is not just a function of taxation. There are multiple elements. There is cost attached to it, there is competitive intensity around it, there is a brand attached to it, there is also a demand-supply equation around it, and also where on the product life cycle the product is. So it's a lot of factors and not only one factor for that matter. But rest assured, any FMCG company, given the competition, given how open this country is when it comes to the business competition, I would say that the government does fair job when it comes to regulating the abuse of dominant position by any of the player in the market. Rest assured, every company is working towards ensuring that the consumers get the best value. As we say, I can quote HUL here, that for HUL, keeping the consumer and the customer at the heart of every decision we take is very important.
Thank you.
Thank you very much. And with that, I think we are concluding this panel discussion.
Thank you. Now we have a pleasant task to perform. I request moderator of the session, Mr. Pinaki Chaudhuri, co-chairperson of the National Fiscal Affairs and Taxation Committee of the Bengal Chamber of Commerce and Industry, to please present mementos to the panelists. To Mr. Ayanav Devgupta. Mr. Sunil Somani. Mr. Dwarkanath. Ms. Nidhi Jain. And to Mr. Kaushik Ghosh. I request Ms. Angona Goharai Chaudhuri, Assistant Director General of the Bengal Chamber, to please present memento to Mr. Pinaki Chaudhuri. We will end the session now, and thank you all for joining us today. We request you to please join us for the cocktails at the Bengal Lounge at the 3rd level.